Going on, you guys? Brendan here for another video. Sorry about earlier, had a little technical difficulty, but now I'm on and back and ready to do this. So we're going to talk about the US dollar Japanese yen today, you guys. We're going to be talking about where the market price looks to be going in the near future and what's going to be happening in the next couple days. So as you can see right now, that market price is definitely moving to the downside, but we have to take into consideration that market price is probably not going to break this area. Reason being is that a lot of areas for a lot of take profits are in this area right here between 10.250 and 10.150. So what's going to happen is that liquidity is being consolidated in this area as of right now, which means that there's going to be a market trap. But we have to understand that we have to take into the month and the consideration of the time as well. So as we can see that we're at the end of the month, so proprietary investors are looking to make their end of the month, quota. So where would price need to move for that to happen? As you can see, price is definitely not going to go to the downside because price is already showing a lot of take profits because a lot of people have been shorting since this area at 10.750. So what's going to happen is that they're going to trap market price for a certain amount of time. They're going to trap for basically for about the rest of today until London session. They're going to trap liquidity from preferably this area as of 10.250 all the way up to 10.500. So we can see that we have two spikes of the high. We have an M formation coming into fruition here, and that definitely is a consideration to take a short. But the thing is, we don't take shorts when we see as well a peak formation. So after we see a peak formation, we never take M formations, we take W formations at this point because we know that the trend is going to go an opposite way. So as you can see that the market price is definitely moving to the upside as of right now. Market price is showing a lot of momentum, and what's going to happen is that I want to show you guys exactly how this happens. So we don't really have that much fundamental data that's coming out for the rest of the week basically, but what we do have is something called a zone hop. So possibly we could be seeing a zone hop in the near future. So first off, we'll look at the 1 hour chart and we'll see where price is in the whole entire realm and why it's exactly right here. So we can see price is definitely showing consolidation at this area where market price is definitely trapping liquidity, and we can see that previous structure is up in this area, which is around 11.350 to 11.250 area. So we could possibly see market price come up out of this area and shift back into this previous structure before we see market turn around and continue with the downtrend. Reason being, there's a lot of trailing stop losses all in this area right here. So there's more trailing stop losses up here than there are down here because barely people got into this buy area because people still think it's short. Actually, there's more short. There's a lot more shorting in this Maker's Handbook. What I gave to you guys, a lot of you guys that were part of Traders Profit Club, it goes over this structure and basically shows you guys how the market does these zone hops, especially at the end of the month. So zone hop is a big piece of how the market, we see a huge breakout. The days are basically like a skyrocket or a plummets. So what we could possibly see tomorrow, which is the last trading day of the month, preferably it's the last trading day of the month, we're going to see a zone hop possibly to take out a lot of these positions that were in the market already. So we could possibly see that market price is giving you time to sell, especially in this area with these two huge bearish engulfing candles. Going to give you time to sell. They're going to trap liquidity like they have been doing for a couple days now, for a full day, right? They trap liquidity. Now they're hoping people are going to look to short the market. A lot of people. So that's why they have given you 10 to 15 hours of consolidation, because the more time they give you, the more consolidation, the more market price they're going to get, right? So what we have to understand is that market makers do this for a reason. So if we go to understand what market makers are, if you guys are new to trading or speculation investing, market makers are basically the people that exchange the money with you, right? Market makers are essentially the transaction base from you and the broker. So what happens is that they take the resulting exposure on their books initially. So they set bid and offers prices to certain currency pairs, commit to accepting deals and these prices within certain constraints. Takes the resulting, look at this, guys, takes the resulting exposure on their books initially, at least initially. The reason why at least initially is because they're going to make profit off it at the end of the day. Reason being is that they will basically give you a trade, which are going to hedge that trade, right? If you're not in the A book, which you talked about earlier, if you're not an A book trader, meaning you're not making money consistently over time, you're a B book trader. You're in a simulated or emulated market that's basically ran by your broker. Could be any broker that you have. So what's going to happen is that they're going to trade. They're going to basically, you're going to trade. They're going to trade the markets. And what's going to happen is that the market is going to fluctuate in a certain time, and they use these time intervals to basically mess with your psychological aspect, right? Because the more time that the market is consolidating, the more antsy you could possibly get, right? If you are a scalper or a intraday trader. So what they do is that they're going to wait. They're going to give you some time to buy or to sell, excuse me. They're going to give you time to sell, as we see here. This is definitely a selling opportunity, right? We see that M formation here. We see another nice formation, right? It should be a boom, break to the low, retest previous structure lows, and call it a day. But at this time, we're not going to probably see that because look at the date. The date is, we have a couple days left in the month. And also, we only have a couple days left in the trading month. You got to take that into perspective. Days really do count when you're trading the markets because there's different times that the market will shoot up and it will decrease as well in specific dates and times. So when we're looking at these things, and I have a handbook, it shows you guys these weekly breakouts and weekly structures where the market likes to run. So we're going to go back to zone hopping and how it works. So zone hopping is pretty simple. Usually it happens during fundamental data, right? CPI numbers, PMI numbers, could be non-farm payroll, could be GDP, could be anything. Housing markets, right? So we know that the US dollar has definitely been battling with their data the last couple of days, right? They've been coming out with negative data the last couple of days in general, right? Especially the home sales. We haven't seen the home sales negative data like that since 2016. So the market is definitely, for the dollar, is struggling right now. So the trades that I took last night as well that were based off dollar pairs, there's a reason for it. I mean, it was a market spike. The dollar had way less strength than I thought it did. So you gotta always, we always lose some trades and win some trades. But anyway, long story short. So what happens is that we want to see zone hopping at the end of the month or the beginning of the month, because what they're trying to do is that they're trying to recapture liquidity, right? Like I said, they will take the exposure initially. This is the exposure, guys. They're taking the exposure initially. They're giving you these trades. They're letting you make money, profit, right? You're making profit, you buying and selling, you're using risk management, you're making good money, right? So this is where the greed comes in because we think that the market's going to short again. So what's going to happen is that market price is going to consolidate this area, give us time to sell, and then once we get enough liquidity trapped in this area, they're going to zone hop. Zone hop meaning that usually London session, could be another time as well. London session, they will trap buyers or sellers in an area, and they're going to basically control the market price for a certain time. So what they're going to do is that they're going to control market price for as long as they can, and they're going to build up pressure. They're going to build up a lot of pressure, and then they're going to let it go. So what happens is that this is a good time where a lot of people make a lot of money, especially if you're on the right side of this trade, right? So zone hopping is basically looking for consolidation in the market. You're at previous weekly lows or highs. So we also can look at price now. Are we at previous weekly lows or highs? We are at this, we're at this week's low, right? So Wednesday is usually the high or the low of the week. Usually, not always, but usually. So when we look at this, it's Wednesday, so we're looking at market price at the low of the week. Low of Wednesday, I should say. Retesting March 20th, right? Previous week's lows initially. So what we're going to look now for is price to regain, retest higher levels. We see 1, 2, 110, 750 is going to be one level. That's going to be our first level to be activated. And this is probably not going to happen for a couple more hours, you guys. This is just a consideration. And we could possibly see that the market's going to shoot back, retest this level, consolidate here before we see a market breakout to the upside. So this is basically what we're going to see possibly in the near future. So if you guys have any questions, please feel free to put into the chat. I do have it open. So if you guys have any questions as well, it's good to see you guys. I've been away for a little while. So I'm really excited to be back and teaching you guys some more stuff about trading. So what else should we know when we're looking at this graph, right? Where would price like to go if we were a banker, right? So if we're a banker and institution, we're already looking to make a lot of money, and not just that, we're looking to control price. Controlling price would definitely not be to the downside. There'd be a decrease of value. The dollar definitely has had a struggle, right? It's had a struggle. It's been consolidating for a while, right? We see the Great Britain pound has been tearing things up way more than the dollar, right? Lately. So when you're trading Great Britain pound US dollar, you know, just take that in consideration. So what we want to see now, so as you guys can see, we've been seeing a huge, so this is the same thing. Same thing, just different scenario, just opposite, really, just a different reflection. So what we're seeing now is the same thing, right? Consolidation, liquidity being trapped, trap liquidity, induce a buy breakout, false breakout, trap sellers, or hit stop losses. So we're basically seeing the same thing. We see market price shift from this area. This is a zone. Say that all this is a zone. Market price is in this zone, could consolidate even in this area. Shoots, makes a shift bar. Shift bar for scalpers, that's like basically their love of life. They buy the shift bar, they get 6-8 pips, consolidate for 2-3 hours, reject price, return back to normal. So what we're seeing, you guys, is possibly, you know, it's market manipulation at its finest, basically, right? So market manipulation is basically what we're seeing in the markets as of what we're going to be seeing in the next couple days. So they're shifting zones. So we're looking at this as a proprietary investor or as a person who has a lot of capital and is trying to make money for their clients, right? We're not looking at this as your average day trader, you know, who does, you know, does what he does. You know, I'm looking at it more so of a banking institution factor, because that will give me more determining factor, and it will just give me more momentum and more lead than it will if I were to do technical analysis based off stochastics or RSI or parabolic SAR or harmonics, you know, which are all great analysis, but it's not even about the analysis or the technical analysis that matters. It's the structure. You have to know market structure. Once you know market structure, you don't even need to use those things. Those things are really irrelevant. So like, you can use this method, right? Use this method, especially when you see stuff like this, and it's all in Market Maker's Handbook. The ones I can show you guys, or most of it at least. You see liquidity being trapped, right? Just think of it like a fish, right? Fish is basically swimming in the lake, right? And the bait is up here, and the fisherman is down here. This is the fisherman. I'm sorry, guys. I'm a horrible drawer, right? And he's cast his line. So the fish smells the bait, so he's swimming upshore. Once the fish catches onto the bait, then the fisherman feels the tug and he reels him in. It's a pretty dumb analogy, I know, you guys, but it's self-explanatory. Like, it's what we are basically doing in the stock market, right? Stock market is based off over-justified optimism and under-justified pessimism. And if you guys don't know what those words are, it's basically fear and greed. Where is fear and where is greed? Basically the same thing. So what happens is that market makers know where the emotional factors and also the market structures are going to be placed at. So once they have fulfilled these market structures or these liquidity traps, they will then reverse price to make a bunch of money and to hit most of the trailing stop losses or the stop losses of speculation investors who don't know what they're doing. So when it comes to other positions, I hope you guys are putting in the comments. I don't know if I have the comments open, but I don't know if you guys can see. I can't see the comments, so hopefully if you guys have any questions, I'm sorry, I don't know if I can see it or not, but I will keep this up until it will show. I know it shows eventually. I don't know why it lags so much sometimes, but we'll get back into it. So what we're going to see in the next couple days, right, we look at Wednesday, Thursday. So Wednesday, Thursday is considered midweek reversal. So Wednesday and Thursday considered a midweek reversal. So we go to Market Maker's Handbook, you guys. This is something that I studied for months, years at that. So Market Maker's Handbook shows you about midweek reversals, right? Talks about midweek reversals are based on pushing liquidity towards one area of the market to test prior area. Okay, test prior area. All right, let's look at price. Pushing liquidity to one side of the market to test prior area. So this is what it's doing, testing prior area. Okay, so we'll go back to it. Once basically such market liquidity has been trapped or pushed, what happens is that the segment above, well, you guys see the segment, it basically shows you that the conditions of the bullish market is now going to be reversed into a bearish market. So I mapped this out, you guys. This is basically a Monday. I'm going to show you guys how it works. So this is Monday, then you have Tuesday, Wednesday, you have Thursday. So Thursday, right, trapped liquidity, open stop losses, open pending orders, and then reversing price and hitting stop losses. So what will we see here? Relatively, it's kind of the same thing. A little more volatile, but basically the same thing. Market price has gone up, right? Monday, Tuesday, Wednesday, or this is basically more than a week, but you guys know what I'm saying. It's going up, it's trapping liquidity, moving this liquidity to this area, shifting the zone with this right here. That's all I know is market manipulation, because I can completely see that this is not going to get any higher, especially with the ADR too. I mean, Great Britain pound was going ham today, so the ADR is definitely going to be hit. So Wednesdays are usually the higher low of the week. So we're looking to go long, right? We're looking to go, long, we're looking to go short. So this is where the short position starts. So I will put this in Discord for you guys once I find the right short position. Last night, I got stopped out of most of my positions last night. You know, stuff happens. I wasn't really happy about that, but everything happens for a reason. So what we're seeing now is that market price is definitely going to be going to the downside now. Perfect entry. We can make a nice 250 pip interval. I would say I wouldn't go 250 pip. That's a little too much. I would say we could possibly, if market price really wants to shift and shift zone that much, could see that. But I would say we're looking at like 100, 150 pips before the end of the week. You know, so we're testing these psychological levels. So, you know, still really good money. You know, 150 pips is with margin. And, you know, if you're doing lot sizes 5 and above, you know, you're making thousands of thousands of dollars. Okay, so really interesting stuff, you guys. Really excited to be here. Love always giving you guys the knowledge that I've learned from my trials and tribulations, but also learning and success and all the other good stuff. So that is basically the map of the blueprint of what we would see for Great Britain pound coming into the near future. I know Great Britain pound is still going to be a long. I know it's going to be long. We're still looking at a long position, but right now, definitely want to see a spike to the low, and then next month, beginning of next month, if we don't see it break this area, basically this area right here, if we don't see it break this area, it's going to bounce. find my arrow. Okay. Retrace, break to the low, consolidate, spike high, breakout of this zone. So that's what I possibly am looking at, and especially in the beginning of next month, right? Beginning of next month is just like the beginning or like the end. It's always high volatility, high volatile factors. So this is really good, you guys. I'm really excited to show you guys some of this amazing stuff that I was able to learn, and really financially set myself up by learning these basic structures in the markets. So going back to Great Britain pound, or sorry, US dollar, Japanese yen, we can see that market price is still battling right now. So it's battling. You see that market price is battling right now. New York session is going to be closing soon. So we're not going to see really any momentum till later today. So we'll probably see the breakout of a pennant, consolidate, Tokyo session. After Tokyo session, London session, breakout, retest, and move higher. So that's just a high probability. It's not, could be true, could be false, but right now statistically and just what I've seen throughout the years, it's very high probability. We'll see a pennant being formed in London session. We'll see the breakout of, or you can say symmetrical triangle, whatever it is. You see the symmetrical triangle being built in Tokyo session. You'll see it breakout during London session. You'll see it retest during New York session, and then you'll see a continuation throughout the day till Friday. And then Friday, you'll probably see a trap. So the market price will then probably move back into its area. So this is a possibility, you guys. This is just my analysis, what I believe. I do want to make up for those positions I did last night. I haven't actually lost 4 trades in I think a month. So that was kind of interesting to see. Especially just getting back on the Discord with you guys. It was not fun, especially you guys not making money as well. It's not fun for me. So hope you guys enjoyed this live stream. Hope you guys enjoyed learning a little bit more about technical analysis, structures, proprietary investment strategies, and just basic knowledge that will help you throughout your trading career. Learning all these technical analysis and all these other stuff, it's cool and all. It's great, right? You can learn all of it. You can learn harmonics. You can learn Fibonacci retracements. You can learn whatever, parabolic SAR. You can learn Ichimoku strategy. You can learn moving average, exponential moving average. You can learn, all these other elements. They're not going to make you a better trader. They're just going to make you a more confused trader, right? You got to just basically define a structure, define a strategy that works for you, and just stick with it. Just stick with it and stick with it and stick. Don't let up. You might be down 6 trades in a row or 10 trades in a row. Don't leave that strategy unless you're losing like 15 trades in a row and like you're blowing your accounts. Like, yeah, that strategy is not working for you. But like for the most part, it's not the strategy, it's your emotions. It's your psychological emotions to the attachment of money. That's the biggest factor why traders can't trade or don't trade full time, is because they are so caught up with the attachment of money that they get into a position, they have a drawdown, they get out of the position, and then they go to the direction they do, and then they try to get back in the market, and then they have another drawdown, or then it was already done with the run, and then they catch it at the high when they should have been caught at the low, and then it becomes a haywire thing, and then you get revenge trading, and then you get greed, and then you get FOMOing, and then you blew your account. So learn from my mistakes, you guys. I've done that. I've been trading for 5 years, basically almost every day. So I know that those emotional tactics, freak out, or you're like your heart's not going at 1,000 beats per minute, that means that you are going to be okay at trading. But if you're trading and you're looking at your phone every 5 seconds, unless you're trading millions of dollars and you're like just trying to get 8 pips, I understand. You gotta be on your phone. But like, if you're scalping, swing trading, it was funny, like I do better as a trader by putting my positions and not looking at the market. Like I will not look at the market basically all day, maybe like 2 times a day, 3 times a day. And that's where I make the money. When I lose money is when I'm on that screen glued, like, some type of drug addict just looking at a freaking screen all day. Like, that is not, I don't even think that's healthy, first off. Secondly, it's like you're going to wear your mental you're going to wear yourself down mentally, you know? So what happens is that when you wear yourself mentally, you're not able to make the right decisions, just like anything in life. So, you know, it's basic psychological stuff, you guys, basic stuff. So, you know, hope you guys enjoyed today's live stream. I will be up tomorrow. I'm going to be talking about gold, as well as where the Great Britain US dollar Japanese yen is going to be going. Oh yeah, before I leave, I forgot. I wanted to tell you guys where the Japanese yen, I believe, is going now. So we can see that market price from the daily chart is going to make this M formation. So we can see that this information is coming into fruition, which this is the first hump of the M. You have the M, second hump, which is